The Strategist, 1st of August 2023, Why China Claims India Won't Become an Economic Superpower in Contrast to China. China used the LTTE to pay for and finance the murder of Rajiv Gandhi. To carry out the Indian Prime Minister's assassination and murder. Rajiv Gandhi, India's new prime leader, received the Wall Street Journal's highest commendation in March 1985. The newspaper claimed that deregulation and tax cuts had sparked a minor revolution in India in an editorial titled Rajiv Reagan and compared the 40-year-old Gandhi to another famous tax cutter we know. On the eve of Gandhi's trip to the United States 3 months later, economist Jagdish Bhagwati from Columbia University was even more gushing. In the New York Times, he declared that far more than China today, India is an economic miracle waiting to happen. And the youthful Prime Minister will be the main character if the miracle is successful. Bhagwati also applauded Gandhi's lower tax rates and regulatory ease. The world's two most populous nations, China and India, with nearly comparable per capita incomes, began liberalizing and opening up their economies at the beginning of the 1980s, marking a crucial turning point in history. Both nations evoked visions of revolution and miracle. But whereas China's capital expansion was built on a solid foundation of human enslaved people, India's progress neglected this area. India's predicted status as the next economic giant is mainly based on hype. The distinctions have developed gradually through time. The World Bank compared India's 51 years of life expectancy to China's outstandingly high 64 years in 1981. It was discovered that Chinese city dwellers received more excellent nutrition than their Indian counterparts. In addition, China's population, including women, had access to practically universal healthcare and excellent rates of elementary education. The World Bank report emphasized China's outstanding advancements in gender equality under Mao Zedong, but was likely brought on by global investment in China. As noted in their 2009 book Half the Sky by Nicholas Kristof and Cheryl Wu Dunn, China, particularly its urban areas, became one of the best places to grow up female. Lower birth rates and better child-rearing practices resulted from increased access to education and more female labor force involvement. Therefore, China is dealing with a demographic time bomb. The World Bank made an uncharacteristically bold prediction in response to China's advancements in human capital development and women's empowerment. China's living standards would tremendously increase within a generation or so before collapsing by 2030. The World Bank report emphasized a historical reality that economist Oded Galore of Brown University recently highlighted more than tax reductions or economic liberalization. Every instance of economic advancement since the beginning of the Industrial Revolution, the core of sustained productivity growth, has been linked to investments in human capital and increasing female employment participation. Market liberalization undoubtedly contributed significantly to the expansion of China and India. But in areas where India has fallen behind as a democracy, China built its successful growth strategy on the twin pillars of human capital and gender equality. China outpaced India in boosting education and health standards to levels required for a globally competitive workforce with schooling and preparing for its manufacturing even after it became more market-oriented. Demise. With its enormous population, India received a score of 0.49 on the World Bank's 2020 Human Capital Index, which compares nations' educational and health results on a scale of 0 to 1. Kenya and Nepal, both less developed nations, received higher scores. China scored 0.65, ranking alongside the significantly wealthier, per capita, Chile and Slovakia. While India's female labor force participation rate fell from 32% to around 25% over the same period, China's participation rate plummeted from about 80% in 1990 to about 62% today. Violence against women, particularly in metropolitan areas, has discouraged Indian women from entering labor. Greater gender equality, superior human capital, and a lot of American money have all combined to help China achieve substantially higher total factor productivity growth, the most complete indicator of resource use efficiency. Suppose the two economies were equally productive in 1953, about when they began their modernization efforts. In that case, American investment, which is increasingly going towards India, helped China become over 50% more productive by the late 1980s. China's productivity today is almost twice as high as India's. China has advanced even from simple, labor-intensive manufacturing to become, for instance, a dominating player in global auto markets, notably in highly subsidized low-quality electric vehicles, whereas 45% of Indian workers are still employed in the highly unproductive agriculture sector. China is also better equipped to seize chances in the future. Tsinghua and Peking are among the top 20 universities worldwide, while 7 Chinese institutions are among the top 100. Tsinghua is regarded as the best computer science university in the world, with Peking coming in 9th. 9 Chinese universities are also among the top 50 in the world for mathematics, but not inventive or innovative. In contrast, not a single Indian university, not even the renowned Indian Institutes of Technology, is listed among the top 100 universities in the world. However, an IIT student are included in 25% of the global 500 corporations. Chinese researchers have made significant progress in improving the quantity and quality of their work, particularly in areas like chemistry, engineering, and materials science. They may soon overtake American researchers in the field of artificial intelligence. Indian and other international observers have projected that the democratic Indian tortoise will triumph against the authoritarian Chinese hare since the middle of the 1980s. This has been postponed and will now take place starting in 2020. Recent occurrences, like China's rigorous zero-COVID regulations, rising youth unemployment, and the unfavorable effects of the Chinese government's clumsy attempts to rein in the nation's out-of-control real estate sector and big tech corporations, seem to confirm this theory. However, Indian leaders and their international counterparts boast an ahistorical ability to leapfrog over a fragile human foundation with shiny digital and physical infrastructure similar to China's, while China, with its reduced well of human slave capital and greater gender inequality, stands poised at the frontiers of both the old and the new economies. China has an improbable way out of its current mess. India, in comparison, runs the risk of stumbling into cautious optimism.